Good morning, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. Today's date is January 5th, 2023. This report, I take a look at the technicals that are driving the Forex market. We'll start off by taking a look at the euro versus US dollar. Looking at this currency pair on the hourly chart, you can see the ups and down volatility that we've seen for half of yesterday and all of today so far. So about a day and a half of trading here. And that range has been defined by support below and resistance above, as usual. On the downside, we did see the price move below this swing area through here, where the price had a number of different swing highs and lows going back in time through here, where the market found these support buyers. Admittedly, there were times when the price moved below those levels, and that happened in trading earlier this week, and also in trading yesterday. After the rise back to the upside, the market did fall below the low of 105.84, but could not sustain momentum. And then what was important was it reestablished support against that old level right through here, and started to move back to the upside. Now on the top side, what is obvious here is that the blue and green lines in the chart, those represent the 100 and 200 hour moving averages, did their job in holding resistance. Not only did we do it here in trading yesterday, we did it right through here. And later on in the European session this morning, the market did find resistance against the falling 100 hour moving averages, which has now moved below the 200 hour moving average, indicative of just a little bit more of a shift to the downside here in the bias here for the euro versus US dollar. Overall, however, if you blur your eyes and take a look at the ranges through here, this is about where most of the price action has taken place. There have been moves to the upside way back here and right here last week, and moves to the downside, including this week, and these little moves here as well. But the value area, or where most of the trading has taken place, is in between the 105.84 and the 106.94 level. It's about 110 pips, not a lot over this, 3 weeks of trading here. So the market is waiting still for the break to either to the upside or to the downside, and that break will come outside of this box, and where we stay in the extremes and start to build value either below or above this area. In between, in the value area sits the 100 and 200 hour moving averages, just keeping that lid on the pair. So the bias is a little bit more to the downside here, but we need to see a break in one direction or the other for the euro versus US dollar to increase the bias in that directional way. Absent that, move back above this level and could be fast break the other way toward the higher extreme. We will see, but the levels are in place, and it's just about up to the market to decide which way it wants to go. Let's take a look at the dollar versus yen, and what we're seeing in the dollar versus yen in the last hourly bars. They move a little bit more to the upside here in what has been a down and up day. Yesterday, we moved back above the 200 hour moving average. It's a green line in this chart, but could not sustain momentum above that level in early trading in the Asian session. We moved below that level, tried to move down to our next target area, which would be right around this line right here. You can see the number of different times where the market found either support or resistance against that level, and then broke above that level yesterday only, and then came down toward it in trading here today, but found early buyers against that level. Once we moved back above the 200 hour moving average, it's a green line in this chart, we came down and based against it, moved higher, came down again toward it, and moved higher again into the current hourly bar, which is trying to extend above the 38.2% retracement for the second time today. That's how this move from this high to this low. If we're able to stay above this level, and we're having a little bit of trouble here, but if we're able to stay above that level, we start to look toward the 50% retracement, 133.83, and build off of the bullish bias above the 200 hour moving average. Let's take a look at the sterling versus US dollar next, and this is the hourly chart. This is the hourly chart of the sterling versus US dollar, and a lot more up and down volatility in this currency pair. If we were to if we're able to define the trading range where most of the activity has taken place, is within this area right through here, and you can see in trading here today, we started off above the 100 and 200 and 200-day moving average. That's a cluster of these moving averages represented by this green line, this blue line, this green line through here. And we just stayed above that level. In fact, we based against it in the Asian session, moved higher, but could not extend above the highs from yesterday and rotated back to the downside after toying with the moving averages through here, trying the upside one last time. The market fell below those levels. And what we see clearly, if I move over here, is that the price has been able to stay on the downside below the 100 and 200-hour moving averages. It's traded above and below the 200-day moving average. It's the lower chart right here, or the lower moving average right here. But so the sellers are more in control. Now we're moving also into this swing area down through here, where the market's going to have to make its decision here. Is it able to get below this level and stay below the level? We tried it earlier this week on this break to the downside, and then move back to the upside, and then tried to stay below it through here, stay below it, but failed yesterday, and we reestablished support here. So we are back into this area here between 119.91 and 120.10. If we're able to get below that level, that would increase the bearish bias and look toward this swing area down through here. It goes back in time, but believe me, that would be the target on the downside, and move away from these moving averages after staying more close to it here through here over the last few trading days. Let's take a look at the dollar versus Swiss really quickly. One of the reasons why I want to look at this chart on the hourly chart is that the price, like the other pairs, honestly, is trading above and below the 100 and 200-hour moving averages. In this case, the last move was to the downside. We're trying to get above the converged moving average right through here at the 0.9280 level. If we're able to get above that level and stay above that level, that would tilt the bias back to the upside. But lots of ups and downs around the moving average here, has traders wondering when the next shove is going to be for that currency pair. The Aussie versus US dollar is another interesting one off the hourly chart. Again, the moving averages are coming into play here with the 100 and 200, or the 100-hour moving average holding support on the dip earlier in the late Asian, early London session. Came down to retest that 100-hour moving average. Recall from yesterday, the market moved above that 100-hour moving average, stayed above that level, ultimately moving above the 200-day moving average. That's the overlay right here. That was that break above the 200-day moving average. If I go to the daily chart here, was the first break going back to June of 2022, where we had 2 trading days with the market closed above, maybe 1 trading day where the market closed above the 200-day moving average. So the move above that level and the failure above that level was significant, and is going to be significant going forward, or the level is going to remain a significant level. If the price is able to get above that level, then we'll forgive this failure here. If however, the sellers lean against that level because it failed yesterday, we're going to go back then and revisit the 100-hour moving average on the downside. So there you have it. Look at some of the major currency pairs as we head into today's trading. We do have the ADP employment statistics coming out in just a moment here. The expectations are 150K for that reading. And later on at 8:30, we have the initial jobless claims expected at 225. We also have the international trade data for the U.S. at minus 73 billion. Tomorrow is going to be the key day when we have a U.S. jobs report released at 8:30 a.m. The expectations are for 200,000. The unemployment rate is supposed to remain steady at 3.7%. 3.5% is sort of like the decade-long low. So we're not far off of that level. And the Fed anticipates that the unemployment rate will head up to 4.6 from their central tendencies. I think the unemployment rate is going to be one of the key measures that the Fed looks at going forward, because they look at the jobs market as being at full employment, and that is inflationary for them. We're seeing the ADP come in at 235. That's higher than expectations. That's not going to be good for or should not be good for the stock market. We'll see. But stronger than expected ADP employment report coming out right now. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.